What's up, traders? Welcome to another video. In this video, let's get into the basics of indicators that we are going to be using. We're going to use the relative strength index, the one on the top, the MACD, which is in the middle, and the volume analysis, which is at the bottom. So the RSI is a momentum oscillator indicator which measures the magnitude of the price changes to find the overbought area or an oversold area in the price of the asset. The overbought area is the area on the top that we can see, and it's going from the 70%, which is this dotted line here, all the way up, and below the 30% line, this dotted line on the bottom, is the oversold area. So we have overbought on the top and oversold on the bottom. So we're going to use this indicator to locate these two areas, above the 70% overbought and below 30% is the oversold. Usually when the RSI line moves into the overbought area, it's up here, okay, it is indicative of a price drop, either a pullback or a reversal. And when the RSI line moves into the oversold area, down below here, it is indicating that the price is ready to start rising again, okay? So when we are, for example, in an uptrend like here, we can see the line goes from the overbought area to the middle line, which is around 50%, okay? And then all the way back up again. So with this indicator, the strategy is to go and find this oversold area, these oversold points here, wait for the line to cross it, and then goes back all in, and then we know that we can buy at that price because the price is going to rise again. Then when it goes all the way up, okay, we can sell because we know that after that it's going to go down. Now when there is a reversal, okay, then the price moves from the overbought area all the way down directly into the oversold area. So at this point here on the top, we would sell and we would wait for the price to go all the way down so that then we can buy again on the oversold area down below here. The next indicator that we have is the MACD, which is the moving average convergence divergence. This indicator will have a signal line and the MACD line. The signal line is the orange line, and the blue line is called the MACD line. Okay, so the lines they can help us identify an uptrend and a downtrend. When the MACD line crosses the signal line, it will trigger some buy or sell signals. Other thing that we identify with this indicator is the volatility in the market and the periods where the price has a lot of variation. Okay, so when the two lines are on the top part of the graph, we are in an uptrend. When the lines move to the let's say below, okay, the middle line in the graph, then we are in a downtrend. When the MACD line is the blue one is on top, okay, and there is a lot of separation between the two lines, this is indicative that there is a lot of there could be a lot of variation in the price range. Okay, so we see this one. We see a lot of variation, we see a lot of separation here, and we see some candles with big bodies. And then when we see that the two lines are very, very close together, we see there is not too much variation, and the candles, they tend to have a very, very short body. So with this indicator, what we are going to do is we are going to wait to be for the two lines to be on the bottom side, let's say on the low side, okay? And when we see the blue line crossing over the orange line from below, okay, then we see an increase in the price, and we know that it is starting to form the uptrend. Okay, then when we are in an uptrend, we have all the lines on the top side of the graph, and we see the blue line on top then crossing towards down the orange line. Then we know that this is indicative of a price going down and the beginning of a downtrend. Okay, so we're going to combine this, and then we're going to buy here when the blue line crosses from below, and then we are going to sell at this point where we see the blue line crossing the orange line. Okay, then we repeat the cycle again. The next indicator that we have is a volume indicator, and this will let us know the trading activity for the particular crypto. So we could spot unusual volumes, and sometimes these are warning us about potential trend reversals, for example. So we need to be careful with unusual trading activity. Okay. So based on all of this, okay, our strategy is going to be first researching the coin we are interested in, using CoinGecko, using the coin website, finding relevant information in Google, in news sites. For example, if there is a news of a new listing of a coin in an exchange or a trading app, new developments that will improve the blockchain, anything that could increase the interest of the people in the coin will also increase the demand. Then once we have the potential candidate, we are going to follow it for a while on TradingView. We are going to analyze all of these, the past price action. We're going to get our indicators there. We're going to see, what is going on, and then we can decide to buy the crypto when we see that the indicators are showing us that we are, for example, with an RSI on an oversold area. If we see the MACD, we see that it's in the blue line is crossing the orange line, so it's starting to form the uptrend. This would be the ideal moment to buy, and then to sell, we just need to see that we are on an overbought area on the RSI, so we know that the price is really high. It won't go higher than that. And then we see on the MACD that the blue line is crossing the orange line towards the bottom, let's say. So we know that this is forming the downtrend. This confirms the trend reversal. Then we can sell here and then buy again when the price is really low. Okay. I hope that now with all of this you have a little bit more knowledge, and that you can start trading and buying crypto in the right time. Feel free to contact me via Telegram if you have any other questions. Okay.